There's a retirement account called the SEP IRA that lets a self-employed person, a freelancer, a consultant, a business owner running a side hustle, shelter up to $69,000 a year from taxes completely legally, and your financial advisor almost certainly never brought it up. Not once. That's not an accident. Most people know the basics. You get a job, HR hands you a 401k form, you put in a few $100 a month, and you feel responsible. But if you're self-employed, even part-time, even just on the side, that playbook is costing you tens of thousands of dollars every year. The IRS has a different set of rules for people who work for themselves, a completely separate tier of tax advantages, and almost nobody in the middle class ever gets shown that door. The SEP IRA stands for Simplified Employee Pension Individual Retirement Account. Don't let the name throw you. It's not complicated. It's a retirement account designed specifically for self-employed people and small business owners. And the numbers are staggering compared to what most people use. A regular IRA, you can put in $7,000 a year, that's it. A 401k through your job, employee contributions top out around $23,000. A SEP IRA. You can contribute up to 25% of your net self-employment income, with a cap of $69,000 per year. That is not a typo. Every dollar you contribute reduces your taxable income dollar for dollar. If you're in the 24% bracket and you max this thing out, you just cut your tax bill by over $16,000 in a single year. But here's where it gets interesting. Let's make it real. Say you're a freelance graphic designer who made $120,000 last year. After the self-employment deduction, your net earnings are roughly $113,000. $20, 5% of that is about $28,000. That's your SEP IRA limit. You open one, takes 15 minutes at any major brokerage, completely free, and you fund it before your tax filing deadline. That $28,000 comes right off the top of your taxable income. Instead of paying taxes on $113,000, you're paying taxes on $85,000. At 24%, that's roughly $6,700 back in your pocket. Not a credit. Real money you keep. Now scale it up. If your business nets $200,000, your contribution limit jumps to $50,000. You're sheltering $50,000 from federal income tax and state income tax, and that money grows tax-deferred inside the account for decades. And this isn't even the best part. You have until your tax filing deadline, extensions included, to make the contribution. You could open this account in October, fund it for the prior tax year, and cut last year's bill retroactively. The wealthy don't scramble in December. They wait until they know the final number, then they act. That $69,000 ceiling we opened with? Not theoretical, available to any business owner with the right net income. Every year, gone from taxable income. Every year, doctors, lawyers, consultants, real estate investors with Schedule C income. These are the people maxing out SEP IRAs year after year, quietly, because nobody wants to advertise a mechanism that keeps money out of the government's hands. Your advisor at the big bank doesn't benefit from telling you about this. They make money when assets are under their management, not when you self-direct a free account at a discount brokerage. The school system never taught it because personal finance was never in the curriculum. And the government doesn't run commercials for legal tax shelters. This is what financial literacy actually looks like. Most people never get here. Now, a few things worth knowing. If you have employees, you're required to contribute the same percentage for them as you do for yourself. That's the real catch. This is also a traditional account, not a Roth, which means you pay taxes on withdrawals in retirement rather than now. But here's the reframe. The IRS wrote this into the tax code on purpose. They want small business owners building retirement security. This is not a gray area. This is the law working exactly as intended. You've been playing the retirement game with a hand tied behind your back. The SEP IRA is one key, and now you know it exists. But here's the question that should be sitting with you. How much have you already left on the table? Every year you had self-employment income without a SEP IRA. That tax window closed forever. You can't go back and reclaim it. There's a related move that goes even further. It's called a defined benefit plan, and the contribution limits make the SEP IRA look modest by comparison. That's the next file.